All right, so it's incredibly exciting morning on S&P. As we know, oil assumed personality of S&P, and S&P decided to become the beast of the indices. This morning, we already had one spectacular trade pre-market for 6 points. One trade since the open of the trading rooms that didn't work out, super duper aggressive, and here is the long trade. Why, oh why have I taken long? Have I gone mad? No, because danger zone had been reached. So if you know where danger zone levels are, you know where to look for trend reversals. And that was the key point. But I expect selling pressure at 1791. It remains the most critical level. And that's why I'm not adjusting my trail yet. That's when I expect sellers to step in. And that's what will determine the power of the rest of the day. So once again, danger zone levels are my short trend exhaustion levels. The reason why my short trade did not work out as I spelled out, there was nothing else on the structure. If I am acquiring trend position outside of these levels, alphas would never do that. They know how to play by the rules. If you have knowledge of the rules, you are not confined to trading room hours. Therefore, 5 trades so far this week on S&P, 1 negative. 1 super duper aggressive negative. So come on S&P, we know you can do it. We know you're the beast. The reason why oil is in so much coma and doing nothing, that's the reason why I'm not touching any longs. It's only a bullish correction. It's a fluff. When market gives you floppuccino, you go get cappuccino. If you're an oil trader, you ain't touching this. This is what I call ultimate junk. This is the most dangerous structure. If you're trading with indicators, you don't know that. If you're trading pure price, you do. That's the difference between knowledge versus following delayed fluff. Go S&P. We know you can do it. Showtime. Give me 1791. Behave, baby. Good girl. Woohoo! Take some profits off the table, would you? Trail 1786. I expect a pullback. Pay attention to precision of the method. Nothing speculative. Where are we on this chart? Tell me. What are you witnessing? You're witnessing the precision and power of pure price. I'm expecting a pullback. Is everybody clear? 1791 remains the key. Price is struggling, as expected. That's the reason why I'm not adjusting my trail to close. So pretty please, it is the first target. Everything I do for demonstration purposes only. It is the first target. Do remember that. Decision point 1 on my guiding light 1 hour. Reversal from danger zone. Simple. This was my short trend exhaustion. This is where you monitor for reversals. And we expect a struggle here because decision point 1 is on the way. Simple. Know your levels. The sellers will stipple right now. This is what will determine if this is the inception of the bullish trend or it's only a correction. You're witnessing as spelled out, 1791 is incredibly critical and price is struggling and taking a major pause. I am adjusting my stop to break even because I know that sellers will come here. Price tells me everything I need to know very far in advance. I'm always open for questions. Danger zone is my trade exhaustion level. So price will blast through 1791. Danger zone is my trade exhaustion level. So here's the explanation. This is how price moves in steps. As I spelled out, 1791 is a key level because multiple time frames telling me that. It's very simple, it's very clear. So if price will make it to the danger zone level, it's my trade exhaustion level on 13 range. If danger zone level is broken, my trade migrates into much larger time frame. Correct? 1791 is a big problem. Big problem. As expected, 4 points later. Make sense? I'm simply monitoring the formations and I'm expecting this pullback. All I need is pure price to tell me everything I need to know. Pullback is because my lovely rally reached decision point 1. Pullback is due. Second target S&P is 1793. This is my trade exhaustion levels. But I see incredibly clearly as you're witnessing the selling pressure from 1793. My trail 1788 and a quarter. Actually closer, 1788.50. I'm not in a trade on oil yet. So again, danger zone played out on S&P was magic. S&P is due for a pullback. Danger zone is reached. Oil finally setting up for something meaningful. Monitoring the formation on oil. Let's cancel oil trade and let's remember. This is exactly the key, as you could see. Danger zone level on S&P 60 minutes. Formula is identical to danger zone level on S&P 13 range. Formula remains the same. It doesn't matter to me what I trade. It doesn't matter what instrument, what time frame. This is where short trend had reached exhaustion level. This is where buyers stepped in. This is where my long trade's getting incredibly tired 6 points later, and that's why I'm adjusting my trail even closer to 1788.75. We reached 2 targets. I am expecting a pullback, but I also expect today the price to blast through this level and to fly much higher up, all the way to 1800 again. But here in the trading room, I demonstrate the method on range charts. That simple, that pure. Range charts tell me where the stops and targets will be. Bigger the range chart, bigger the stops, bigger the targets. If I'm trading 5, the stop is roughly 7. If I'm trading 13, the stop is roughly 15. And so is the target. The target here, first target was 4 points. Actually. ADV. The problem on this particular trade, very, very critical level. 94. If you're an oil trader, you completely know that. You also know that oil is not for the beginner traders. Oil is for experienced traders who double their account elsewhere. So you're witnessing this danger zone dance on oil. The structure between oil and S&P currently could not be more different. Problem that's causing on oil currently is decision point 1. This is a rally from danger zone to this level in correlation with 94 area. That's why I spelled out there is nothing as kosher as structure on S&P. This is magnificent. This is dream. Rally is on. Oil, it's a bullish fluff. There is not much meaning here. Nada, zero zilch. But this is a formula. Danger zone S&P 13 as spelled out. Watch out of the fill at 1793. Danger zone S&P 1 hour. Danger zone oil 1 hour. All alpha wave trader proprietary Fibonacci levels. Reversal levels. And what is causing so much fluff and so much pain on oil? Monthly danger zone. Short trend had reached this level. But there is so much fluff. There is not enough buyers. There is so much weakness. There is so much slowness on oil. And as I spelled out many weeks ago, I expect very, very weak pullback. And that's exactly what's happening. The struggle is on. So will oil blast through 94? Will our trade continue further up? Come on, oil, you can do it. You are not S&P. Formula remains the same. Doesn't matter. Oil monthly, S&P 13, 1 hour, whatever instrument, whatever the time frame, formula remains the same. The dance between the levels was spectacular and went on for almost 2 weeks. So if you're taking short, you would know better not to enter into this level, but to monitor for reversal at this level. And this is where Riley staged from, and this is where Riley takes a pause. It's a historical level, 1800. If price will blast through 1800, next level 1813.75 and all the way to 1868.50. But 1800 is a problem. And yesterday we were taking only short. So here we are, 6 trades later, only 1 negative on S&P. Oil is struggling. Oil is fluff. Oil moving drastically slower. So will it finally break through 94 and give us a rally? Will oil finally blast through decision point 1? Oil is finally behaving, but as expected, 93.99. Decision point 2 is a major problem. How predictable. Know your levels. Decision point 2 is respected, but oil showing incredible potential. At any moment, I'll be moving my stop to break even. I'm seeing buyers stepping in. I really am. Just 94 causing this pause. So here we are, total of 6 trades on S&P, 1 negative. First trade on oil this week. There was absolutely nothing on oil yesterday. So here we are, 7 trades, 1 negative between 2. Next level on oil is danger zone level. 1 tick prior, you're witnessing the same thing as an S&P. As I spelled out to you, I expect this trend to continue on and on and on, all the way to 1800. But I'm trailing very carefully. What are you witnessing on oil? Danger zone reached just like S&P. Oil is taking major pause. Stop, break even. So how predictable? Both S&P and oil had reached danger zone and both are struggling. Reminder, this is my trade exhaustion level. That's why my stop at break even. This is where price give us always pull back. It is exact same identical formula as oil 1 hour. It is exact same identical formula as oil monthly. Except on monthly and hourly, it's my trend exhaustion level. And where I demonstrate the method on range charts, it's my trade exhaustion level. That's all there is. Pure price for entry, Fibonacci for exits. No delayed indicators, no fluff. You know all the targets, all the stops with precision. And it doesn't matter what instrument, and it doesn't matter what time frame, and it doesn't matter what platform. Here's Cutie Fruity Apple reached the most critical level in the market structure, decision point 1. And this is where price had struggled from almost 3 weeks. And finally trend broken through this level that you never ever want to enter into, and price flew all the way to the danger zone. And what are you witnessing? What is Apple doing? Where is it dancing? That's all there is. Know your levels. Know where danger zone level is. Know where to take profits off the table. Formula remains the same, doesn't matter if it's Apple Daily, S&P 13, S&P 1 hour, or oil 5, 8, 13, 21, or bonds, whatever it is. I had been started looking on bonds because bonds are the most liquid future in the market structure. Pay attention why bonds struggled here so much yesterday. If you're trading 1 hour chart, this was your first target. Your long was from 132.12. This is where you take in your first target. Alright, that's simple. And so here we are out of oil. Very tired trade. Very expected for exact same reasons. Know where danger zone levels are. know where trade exhaustion level is. S&P completely stuck. Exact same thing happens on NQ as happened on oil and happening on S&P. Long trend is totally exhausted. This is what happened when price reached danger zone. Complete reversal to decision point 2. And here's the fluff continues. Acquiring long positions here is simply not a clever thing to do. You are seeing how critical it is to know where this level is. This is exactly what happened on Apple. This is exactly where S&P reversed from this morning. You're witnessing daily, weekly, monthly range charts. Everything you learn on the range chart, unless in the mentoring course you choose the instrument and time frame you want to trade, and that's what we concentrate on. And then you come to all the group classes. 24/7 manual, Monday, Wednesday, 12:30 to 2 class, and Friday wave class in the morning. All the other hours you come to the trading room. 10% of the students learn everything on the first class first week. The other 80 learn everything within 4 weeks. 8 weeks is definitely an overkill. You are witnessing how essential to know these levels. Doesn't matter if you trade range charts, doesn't matter if you position trade Apple. Formula remains the same. So, heads up. At any moment, I may be taking short on S&P, but based on Alpha Wave Traders rule, it will be an aggressive trade because it's a corrective structure. Major trend remains bullish. So, Alphys, those of you who know the method, you don't take aggressive trades. You don't need that. Oil in a coma. S&P is heading south, south, south. So as I spelled out, those of you who are taking short trades, it's pretty duper aggressive trade. Again, reminding you the power of knowing where danger zone levels are. Alright? What are we witnessing on S&P? S&P will continue rallying further up. I will give you levels to the upside in just a second. Do not be surprised if S&P will make it today back up to 1800. What is the problem on oil? Drastically different structure. Oil stuck at decision point 1. Again, nothing in common between structures on oil versus S&P. So here's my projections for the rest of the day. Decision point 1, which is the first level you should be monitoring for the shorts, the end of the minor trend, 1797.50. You are seeing how drastically challenging and difficult this level was. Exactly the level we had taken shorts from yesterday. Once this level is broken, which based on the current structure more than likely will happen, next level will be 1800. It still remains historical level. Don't ignore it. Next level 1801.50 and all the way out. Bullish rally remains the same. So therefore, that's why I stayed out of taking short on S&P. If you know what price is telling you, you know how to remain selective and conservative. So, adios everybody. I will still monitor for a few more minutes to see if I have a trade set up. But if I don't, have a marvelous afternoon and look forward to seeing you tomorrow. Class is ongoing. Look forward to seeing you there. I'll be teaching wave class on Friday.